Many Canadian seniors are still paying the full property tax bill without checking whether the law already gives them relief. Let me be clear from the start. In Canada, there is no single national rule that says every senior stops paying property tax forever. Property tax is usually municipal, relief is often provincial or local, but many seniors are legally entitled to grants, rebates, credits, cancellations, or deferrals that can reduce the bill, refund part of it, or let them delay payment. The problem is that these supports do not arrive with a warning label on your tax bill. If you own your home, live on a fixed income, receive OAS, GIS, CPP, a small pension, or you are helping an older parent stay in the house, this matters. Property tax is one of the biggest costs of aging in place. A retired person may cut groceries, delay repairs, or dip into savings while still missing a program created for that exact situation. This is not charity. These are official rules, and in many cases you have already paid into the system your whole working life. The first mistake seniors make is assuming the city will automatically lower the bill because they turn 65. Do not assume that. Some credits are linked to the income tax return. Some grants must be applied for every year. Some deferrals require a separate form. Some municipalities ask for proof of age, income, ownership, and residence. If you miss one paper, the bill stays high. That is why two neighbors of the same age can pay different amounts after relief. One asked. One did not start with the most important idea. Your property tax notice is not the final answer. It is the starting point. When the bill arrives, look for the municipal tax amount, any school or education tax portion, and any credits, grants, rebates, or deferrals already shown. If nothing appears, that does not mean you do not qualify. It may only mean you have not triggered the program yet. Ontario seniors should pay close attention because there are two paths people often confuse. One is the Ontario Senior Homeowners Property Tax Grant. This is for low to moderate income senior homeowners, and it can put money back after property tax has been paid. You generally apply through your income tax and benefit return, and the details can depend on age, residence, income, and whether property tax was paid on your principal home. The mistake is thinking, CQRA knows I am a senior, so they will handle everything. Filing matters, but you still need the right application information. The second Ontario path is the Ontario Energy and Property Tax Credit, part of the Ontario Trillium benefit. In plain English, it is a tax-free payment meant to help with energy and property tax costs. Renters may also be affected because rent can include property tax costs indirectly. Again, it is tied to the tax return. So if a senior stops filing because their income is low, they may accidentally block benefits designed for low or modest income people. Now look at British Columbia. BC has a homeowner grant, and seniors can receive an additional amount if they meet the rules. It reduces the property tax you pay on your principal residence, but it still has eligibility rules, assessed value rules, and an application process. BC also has a property tax deferment program. Deferment means the province may pay the current property tax now, and the amount becomes a loan secured against the home. That can protect cash flows, but it is not free money. Interest and rules matter. Alberta has a seniors property tax deferral program as well. It allows eligible senior homeowners to defer all or part of their residential property taxes through a government loan against home equity. For a senior who is house rich but cash poor, that can be a lifeline. But the catch matters. A deferral is not the same as a cancellation. It delays the tax. You need to understand the interest, ownership requirements, and what happens when the home is sold or the estate is settled. Nova Scotia has a direct example of why seniors should not assume. The property tax rebate for seniors helps low-income seniors with municipal residential property taxes. It can rebate part of what was paid, up to the program limit, but there is an application window and paperwork. A person can qualify, pay the tax, and still get nothing back if the form never goes in. Put the deadline on a paper calendar and ask your municipality to complete any required tax sheet well before the last week. Manitoba is another reminder that property tax relief may not be called a senior exemption. It may show up as a homeowner's affordability credit, a school tax rebate, or a provincial credit connected to your bill. In Winnipeg, for example, credits can be shown directly on the tax statement. If you see a credit, check whether it is the full credit you are entitled to, whether you had to apply for any portion, and whether your installment plan changed. Quebec has its own structure. Seniors may be able to claim a grant to offset a municipal tax increase caused by a significant rise in the value of their residence. The key word is offset. It does not mean every senior is excused from property tax. It means relief may apply when certain conditions are met. Check the provincial tax site and municipal notice, then confirm which line, schedule, or form applies. Now let us talk about municipal programs, because this is where many seniors miss real relief. Some cities offer property tax increase cancellation, property tax deferral, water rebates, solid waste rebates, or hardship programs for low-income seniors. Toronto is a good example. The city has property tax and utility relief programs with annual applications, supporting documents, and deadlines. That word annual matters. If you were approved last year, do not assume you are approved this year. Many seniors lose relief not because they became ineligible, but because they did not reapply. Your city or town may use different names. It might say tax cancellation, tax deferral, tax rebate, low-income senior relief, water rebate, waste fee rebate, tax assistance, or hardship relief. Do not search only for the word exemption. That word can hide the answer from you. When you call City Hall, ask this exact question. Do you have any property tax relief, increased cancellation, rebate, or deferral programs for seniors or low-income homeowners? And do I need to apply every year? That one sentence can open doors that a normal property tax bill never explains. The next mistake is not understanding the difference between a rebate, a credit, a grant, and a deferral. A rebate usually gives money back after you paid. A credit reduces tax or lowers what you owe. A grant is a payment or reduction under a program. A deferral lets you pay later, often with conditions. If you need cash back, a rebate may help. If you need a lower bill, a credit or grant may help. If you have home equity, a deferral may help, but it must be understood carefully. Here is the paperwork you should gather before you call anyone. Keep your latest property tax bill. Keep proof that you own and live in the home. Keep your CRA notice of assessment. Keep proof of age. Keep proof of spouse or common law status if relevant. Keep receipts or confirmation that property tax was paid. If you receive GIS, keep that proof too, because some programs use low-income or GIS-related rules. Having these papers ready can turn a confusing call into a completed application. Couples need to be especially careful. Some programs look at household income, not just one person's income. Some ask whether a spouse or common law partner owns the home. Some require that the home be your principal residence. Principal residence simply means the main home where you normally live. If one spouse is in care, one spouse is still at home, or ownership was changed for estate planning, do not guess. Call the program office before you assume you are disqualified. Working seniors should also check. A person can be over 65 and still have employment income, consulting income, rental income, RRIF withdrawals, or investment income. That may affect income-tested relief. But do not decide on your own that your income is too high. Some programs help low-income seniors only. Others help moderate-income seniors. Others are based on the property, age, or local rules. The safest move is to apply or at least use the official calculator or eligibility checklist. There is also a timing issue. Property tax bills usually arrive on a schedule, but tax credits may be based on last year's income tax return. That means your 2026 relief may depend on your 2025 return and your 2025 property tax information. If your income dropped after retirement, after losing a spouse, after stopping work, or after a market loss, last year's numbers may not reflect how tight things feel now. Still file, still ask. Some offices can explain whether current hardship programs exist even when tax return-based credits lag behind. Now, a word about scams. Real property tax relief does not require you to send gift cards, move money to a safe account, or give banking passwords to someone who calls out of the blue. Government programs may ask for forms, tax information, and documents, but you should apply through official websites, mailed forms, city hall, provincial offices, or trusted tax clinics. If someone pressures you, threatens arrest, or promises a secret senior exemption for a fee, stop. Hang up. Call the official number printed on your tax bill or the government website. The most valuable habit is to create a yearly property tax relief checkup. Do it every spring or as soon as your tax bill arrives. First, file your income tax return even if your income is low. Second, review your bill for credits already applied. Third, search your province's senior property tax grant, rebate, credit, or deferral program. Fourth, search your municipality's senior property tax relief and utility rebate programs. Fifth, check the deadline and whether you must reapply annually. Sixth, keep copies of everything you submit. If you help an older parent, Do not wait until a tax sale warning, arrears letter, or utility cutoff notice appears. Sit down with the bill early. Ask whether they filed taxes, received GIS, applied last year, or lost a spouse, because rules can change after that. Many seniors are proud and do not want to say, the house is becoming hard to carry. A calm conversation can protect their dignity and their home, bot-ib line. Most seniors are not automatically exempt from property tax simply because of age. But many are legally entitled to relief that can reduce the pain of that bill. The money may come through a provincial grant, a tax credit, a municipal rebate, a utility relief program, a school tax credit, or a deferral. The name changes, the forms change, the deadline changes, the principle does not change. You do not get the benefit you never check. So this week, take action. Pull out your property tax bill. Pull out your CRA notice of assessment. Write down your age, household income, and whether you receive GIS. Call your municipality and ask about senior property tax relief, tax increase cancellation, utility rebates, and annual reapplication. Then check your provincial government site for senior homeowner grants, property tax credits, rebates, and deferral programs. If you use a tax preparer, ask them directly, did you claim every property tax credit or senior homeowner benefit available in my province? Do not make it a casual question. Make them answer clearly. Share this with one senior homeowner, renter, spouse, adult child, or neighbor who may still be paying full price without knowing what exists. One form, one phone call, or one tax return line can make a real difference when every dollar has to stretch. You worked too long to leave legitimate relief sitting on the table.